Now, all throughout the Pronto tax class, we keep harping on this idea of creating value for your client and also showing the client the value that you're actually creating. So conveying to the client, hey, you're saving this amount of money by using my expertise. One of the most important ways to do that is to obtain deductions for your client, deductions that they qualify for. So of course make sure that they qualify for them, but you have to really be on the lookout for possible deductions. Now, part of this is being prepared. When you show up for work during tax season, you need to have done your research and know what deductions are available. There's a certain element of where you can identify certain types of tax preparers, okay? So someone that has a home is usually going to itemize deductions. So you may say, oh, I'm gonna look for work deductions that will go on that Schedule A form. Different types of taxpayers. If you're self-employed, you may want to try to catch, or you definitely will want to try to catch, that self-employed health insurance deduction, which is very overlooked. So right now, I'd just like to let you know about 3 tax deductions that are very commonly overlooked. And so whenever you're preparing tax returns, look out for these 3 deductions. The first one is student loan interest. Now, this tax deduction used to be very easy to find because the taxpayer would receive that Form 1098E from the student loan interest, from the student loan company. That's the form that the company will send the taxpayer saying, hey, you paid a couple $100s of student loan interest and use this on your taxes. However, in the last couple years, student loan companies have started only posting that 1098E form online, okay? So they won't actually send a piece of paper to the taxpayer's house saying, hey, claim this deduction for $100 of student loan interest. Now, as a tax preparer, you want to make sure to ask about that. Ask, hey, are you paying back any student loans? Because many times now, the taxpayer will not have that piece of paper to show to you. So you want to make sure, especially if you know that the taxpayer went to college, graduated from college, is very common, even many years later. I know from experience that you may still be paying back your student loans. So make sure to pick up that deduction. Another thing to note about that student loan interest deduction, remember, is that that's an adjustment to income on the 1040, okay, as opposed to an itemized deduction. And an adjustment to income, that's a certain type of deduction where you do not need to be able to itemize deductions in order to claim that deduction, okay? So in other words, everyone who pays student loan interest is going to be eligible to use that as a deduction, okay? So that means that when you ask that question, hey, did you pay any student loan interest? The taxpayer is going to think to themselves, oh, this person is looking out for deductions that I may not know about, or maybe I forgot, oh, hey, I was paying back a student loan. Even if it's only $100 in student loan interest, let's say that taxpayer is in the 25% federal tax bracket. That $100 is $25 of tax savings. So it may not be a lot, but again, it just shows that you are doing your job and you know your role as a tax preparer. Now, the second very commonly overlooked tax deduction that I want to point out is educator expenses. Just like student loan interest, educator expenses, you do not need to itemize deductions, so you don't need to use that Schedule A form in order to take this deduction. You can take it as an adjustment to income or just a single deduction on that first page of the 1040. So that means that more people will qualify, not just people that itemize deductions. Now, educator expenses, you have to be a teacher. You can also be a teacher's aide or be in the classroom, essentially. The maximum deduction on this is $250, okay? So again, it's not a huge amount, but every time that you're ever doing taxes for a teacher, you want to ask and see, hey, did you have any out-of-pocket funds that you paid for classroom supplies, education expenses related to your job? And you'll find that teachers, especially since there have been a lot of cutbacks in public schools as far as what classroom supplies are paid for, is that there are very many teachers who will pay out of pocket, $500, $1,000 for student materials, okay? So say like to decorate their classroom or, to make photocopies. The teachers now, they may have some of those expenses, and so you definitely want to, when you're working with teachers, ask about that. Did you have any classroom expenses? Did you have any educator expenses related to your work that you weren't paid back for? And one thing about teachers is that you'll definitely notice that they very much appreciate you asking about that, because a lot of teachers, they do have to spend a lot of money to do the best job that they can in the classroom. And so it's really one of these things that it may not save them a ton of money. You know, it may save them $50, $75, you asking about that deduction, but it's something that is going to make your client very happy, because they're going to be you know, psychologically, it's going to make a difference to them when they perceive the value of your service. Oh, hey, yeah, that's the guy or that's the lady that helped me get that deduction related to the expenses that I paid for classroom supplies. So it's really something that can make an impact on a client, even though the dollar figures may not be huge. Now, the third overlooked tax deduction that I would like to point out is a little bit more on the advanced side, but let's see if you can pick it up here. So on Schedule A, you'll notice that you can either take the state income taxes, state and local income taxes, or the sales tax as a deduction on that Schedule A. Okay, you can choose either or. Now, usually the state and local income taxes are going to be a better deduction. Remember, a bigger deduction is a better deduction. However, there's a very common overlooked deduction, and that is state income tax that was paid related to previous years, okay? So I'll give you an example. Let's say that you have a new client who comes into the office and they don't want to go to their old tax person anymore because they kept owing income tax, okay? Now, likely that taxpayer may have paid with their state tax return from the previous year, right? They may have had a payment due and they may have paid that amount. You need to pick up that deduction on the Schedule A for the next year, right? Because that's a deduction on the federal tax return, not on the state tax return. But remember, state income taxes paid in the current year, the year that you're preparing the tax return for, so if it's 2010, any state income taxes paid in 2010 should appear on that Schedule A as a deduction. So you need to look at the taxpayer's last income tax return and see, oh, hey, if you owed at the end of the year and you paid $1,000, we want to make sure to pick up that deduction for this year's tax return. And a lot of times the amount will be a little bit bigger like that, $1,000. So 25% tax bracket on the federal, $1,000, that's $250. There's a couple little wrinkles on this as well. Any state income taxes that were paid in the current year are deductible in the current year, okay? So that would include, let's say that someone has an installment agreement, they owe the state of California back taxes, let's say. So they're making payments of $200 a month in 2010, okay? So $200 a month, 12 months, that's $2,400. You have to know, oh, hey, if you're paying state income taxes, I'm gonna deduct that $2,400 on your current year, on your 2010 federal tax return. And again, with a big deduction like that, it can make a pretty big difference. Another thing, another wrinkle on this idea is estimated taxes. So let's say that someone is self-employed and they're paying quarterly, they're sending in quarterly tax payments to cover their current year taxes, right, to the state of California. That is going to be a deduction on that Schedule A, okay? So there's a couple little wrinkles in this. It's a little bit of a more advanced topic, but when you're working on that Schedule A and you see for a taxpayer that, you know, maybe is in an installment agreement, owes state income taxes or owed state income taxes the previous year, you have to pick up that deduction, or you should pick up that deduction for your client. And that's something that's very often missed. A lot of times if the person was a previous client of you or your company last year, that will automatically be in the tax software. Say they owed $1,000 last year, it will automatically add in that deduction. But if they're a new client, you're going to need to know enough to manually input that deduction. And also to ask the client, hey, were you paying any state income tax quarterly last year if they're self-employed? And kind of look at that area. And this deduction, which is often overlooked, a lot of times the amounts are greater, and when the amounts are greater in terms of deductions, the tax savings are better, okay? So those are three very commonly overlooked tax deductions. As you're preparing taxes, these are things that a lot of people miss. If you don't miss these things, you will be ahead of the game and you'll be doing a great job. So just to reiterate briefly, number one is student loan interest. Remember that the student loan companies are not sending, a lot of them are not sending paper statements. So make sure to ask about student loan interest when you're doing the tax return. Secondly, that educator expenses for teachers, they'll definitely appreciate you asking about that deduction and obtaining that deduction for them. And thirdly, state income taxes paid for previous years on the Schedule A. Those are 3 deductions that you should always be on the lookout for, and that many of your peers, many of your competitors will miss, so make sure that you don't miss them.